doctor's visits, prescriptions out of pocket, vision and dental expenses. For most taxpayers, these are not tax deductible. But what if there was a way to write those off? Better yet, what if I told you there's a tax loophole hiding in plain sight that allows you to save taxes 3 different ways, and most people aren't even using it? Welcome everyone. I'm Gabe Velez, CPA and partner at Tarani & Velez, and today we're taking a closer look at the House Savings Account, or HSA for short. On screen, you'll find our agenda, so let's get into it. So what is an HSA? A house savings account is a tax-advantaged savings account for individuals with eligible high-deductible plans. The funds are set aside to be used for qualified medical expenses, but unlike FSAs, which have a use-it-or-lose-it rule, HSAs allow you to roll funds over year after year. Once the funds are in there, they can be invested in stocks, bonds, mutual funds, and if you're self-directed, even real estate. And just like an IRA, an HSA allows for tax-free growth of funds and non-recognition of income. In order to qualify to contribute to an HSA, you need to be covered by a high deductible health plan. So what's considered a high deductible? For 2025, your deductible has to be at least $1,650 for individuals or $3,300 for family coverage. Furthermore, out-of-pocket maximums, which include your deductible copays and other insurance-related expenses, are capped at $8,300 for individuals and $16,600 for families. Once you hit those out-of-pocket maximums, your insurance kicks in and covers 100% of the rest of the year. Check with your employer to see if an HD/HP is an option for you. And let's drill down on what's allowed here. Qualified medical expenses are broader than most people think. We're talking about routine doctor's visits. We're talking about urgent care, prescription, vision like glasses or contacts, dental, therapy sessions, and lab work. And the list goes on. So let's talk numbers. How much can you contribute to an HSA annually? In 2025, if you're an individual, you can contribute up to $4,300. And if you have family coverage, that number jumps to $8,550. Furthermore, if you're over 55 years old, you get an extra $1,000 as a catch-up. So make sure to take advantage and max out those accounts. Now let's talk triple tax benefits. The 3 main tax benefits for an HSA are, number 1, tax-free contribution. That means you get to deduct your HSA contribution on your personal tax return. Number 2, tax-free growth. Investments inside an HSA grow tax-free. No tax on the income, no capital gains tax. And finally, number 3, tax-free withdrawals when you use those funds for qualified medical expenses. Another great benefit of the HSA, it can be used just like a traditional IRA once you hit 65. At that point, you can take distributions for anything, not just qualified medical expenses, and you just pay regular income tax. However, if you're under the age of 65 and take money for non-medical expenses, there is a 20% penalty on top of the income tax. So don't do that. But here's a bonus. Unlike a traditional IRA, the HSA has no required minimum distributions at age 73. So that gives you a lot of flexibility. Here are some quick mistakes to avoid. Number 1, using HSA funds for non-qualified expenses before the age of 65. That's when you're going to hit that 20% penalty plus tax. Number 2, not tracking receipts. You want a clean paper trail to support your deductions. Number 3, letting the HSA sit in cash. You can invest it. Number 4, going over the contribution limit, which is easy to do, especially if you switch jobs or insurance plans. So let's wrap it up. The HSA gives you triple tax benefits. It's best for folks who are relatively healthy and okay with high deductible plans. It doubles as a retirement account with no RMDs and penalty-free withdrawals after 65. Just be mindful of the contribution limits and stay within the IRS rules because used correctly, it's one of the most powerful tax tools out there. Thanks for joining me today. For more tax strategies or to build your comprehensive tax plan, head over to www.tnvllp.com/tax-planning. That's www.tnvllp.com/tax-planning. llp.com/tax-planning. See you next time.